Welcome to Monday Returns, except for it's not a Monday now. I'm actually going to move back from doing the return views on a weekly basis and looking at it from a monthly standpoint. So the first month we'll do this is for November. Obviously, we just finished. So let's jump into it. Over the last month, on the equity side, if you were in China-based funds, you did really, really well. And it was all types of different sectors of their economy. So from internet to tech to consumer discretion, communication services, uh, Chinese focused funds did really, really, really well. Some of the companies that are in here, Crane Shares, Invesco, Global X, but even iShares, Crane Shares, Invesco, Global X they do lots of funds that are very niche, so depending on what's happening in the market, they can do really well one week and bad the next week. But really kind of give you that niche exposure that is kind of hard to get otherwise. But there's also iShares, just their MSCI China fund. That's a very broad-based China-based fund. Did 26% last month. So again, that sector blew up last month. Did really, really, really well. Now, that being said, China is coming off some extreme lows, so it's not so surprising that they would have these big numbers coming off their lows. But again, if you had exposure to this in your portfolio over the last month, you did really well. On the equity side, on the downside, as you might can see here, lots of crypto-based type ETFs got beat up real bad. So, this first one here is actually not a crypto, that's a cybersecurity, but crypto, digital revolution, blockchain, future of finance, blockchain, Bitcoin miner, blockchain, crypto, VanEck, digital assets mining. All of those were beat up. Obviously with the FTX implosion over the last month and some of the fallout even before that, and just a tough market. Not completely surprising to see some of these names beat up at this point. Moving over to the fixed income side, really a strong month on fixed income. Corporate shares, high yield shares, long-term corporate bonds did really, really well. And, again, some of these are just very, I don't want to say bland, but very wide-based long-term corporate bond did 8% last year. So, getting back some of its losses from earlier the year, not all of them by any means, but interesting month to see the kind of strong bounce back from high grade and even longer term. So that might kind of give you an idea where people think some of the changes are going to be tame, or that maybe that inflation at some point will roll over in the near future is kind of the moves to that. But again, really strong bounce back for a lot of this sector. As you can see, not even a whole lot of them on the downside. These in particular did really well when interest rates were rising. Over this last month, I guess investors are saying, maybe we've reached that peak and they've lost some. Obviously we'll see what happens as we move forward on that path. Commodities, kind of a mixed bag, more on the metal side, coffee, platinum, metal strategy, still some oil funds in here as well. Not a huge month, but again, we'll take strong 4% returns any month that we can get them. On the downside, kind of again a mixed bag, kind of what you would expect on a kind of a normal, moving economy, that there'll be some winners and losers month to month. Nothing really too strong. Natural gas was down fairly big, so those types of funds were exposed, down 10% on the month in November. Currencies, not a whole lot of ETFs within the currency world, but it is interesting to see that the dollar-based one that's bearish on the dollar did the best. The dollar giving back some of its gains over the last year. Emerging markets coming on over the last strong over the last month. Not too surprising. Now, does that mean the dollar's run is done? No, that may be just more of kind of giving it back over a short term. but it's been high, so it has room to fall per se. Also on the downside, some of these blockchain crypto types that are considered, I guess currency, down, and again, beat up pretty bad, down over 20%. Going to the alternatives, what did really well? Real estate, as you can see, kind of all over the world, different sectors within the real estate area did very strong last month. Some of these others, long short equity funds, actually surprised they did as well as they did. Sometimes those are hard to manage in markets that are rising like they were last month, even though it was fairly volatile. But so again, nothing too extreme here. On the downside, again, Bitcoin strategies, in simplified interest rate hedge fund here. This is actually an interesting fund that did really, actually both of these funds did really, really well as interest rates have been rising. That they fell so much over the last month. Again, I think that's where the market feels like we've kind of rolled over in inflation, or will soon be rolling over inflation. Now we'll see if the market's wrong or right on that. I personally think we're going to have it a little bit longer and higher than we think. But the market right now is suggesting that, they don't agree with that. So we'll see how that shakes out. And then on the mixed view, asset allocation funds, these are real returns. These actually can be all types of different strategies. Nothing crazy on the upside this past month. 7% on the high side, but as you can see, a lot more winners than losers this month. So again, it's kind of a risk on returns, taking advantage of that over the last month. And then lastly, I always like to look at the leverage returns, especially over a month's time. You can see they, in a week to week, they can be some extreme numbers. Over a month's time, they do kind of peter themselves out, even on the downside and upside. From a exposure standpoint, that's typically why you want to jump into leverage. You think something's going to pop over a very short time, and typically a small sector. Last month, or you would have actually done better just being in a plain Jane China ETF. But again, China internet bull, 27% on the month. Very strong numbers, but kind of fall along with what we saw just on the equity side. So a lot of Chinese, although there are some others here. On the downside, if you bet it against China, you did really bad last month. Natural gas has showed up in the commodity section, would show up doubly worse in these leverage funds. So again, typically they just kind of follow what has happened in the markets. Whatever's been bad, you got a little bit more on the downside, and then if you pick the right place to be over the last month, you can kind of boost these out. But typically on the upside, this is where you see these shorter term week to week plays where you see some of the extreme numbers with that. So jumping back to the equities again, Chinese focused funds were the place to be last month. Really, really strong returns with FTX's blow up in the crypto space. It's obviously where you didn't want to have a lot of exposure within your portfolios. Overall, what were the markets saying? I think the people were pushing the markets forward. We'll see if they have the power to continue to do that over this next month, end up the year strong. Maybe cut back some of these losses that we've dealt with this year. So we'll see what happens. So I hope this was informative. I will talk to you soon. Have a great day.